Hello, friends. Odell DeVay, president of Houston FinTech, HoustonFinTech.com, Mercedes Financial Corporation. Now, money matters. Building wealth through investing, particularly building wealth through real estate investing. One of the first things we have to have in order to go into business, in order to go into real estate investing, in order to go into any form of investing, any form of taking a chance, risk, building ourselves up, we have to have a mindset that's different from the normal or the average. So today we're going to talk about, in building wealth, we're going to talk about the consumer mindset and the producer mindset. The consumer mindset and the producer mindset. Again, I'm Odell DeVay, and today's lesson, building wealth through investing and understanding the difference in a consumer mindset and a producer mindset. It all happens in the mind, right? It's been said before that who we think we are, we are. Whether you have it or not at the time, you have to first believe that it's obtainable for you. Believe that you're intelligent, smart enough, willing to work hard enough, efficient enough, alert enough, have a strong enough attitude and thick enough skin to get to where you want to be. You have to see it first in order to get there, right? So it starts with the mind. So let's look at the difference between the consumer mindset and the producer mindset, because it's going to be crucial to have a producer's mindset in order to be successful in any aggressive form of investing, especially real estate investing. So, what is the consumer mindset? The consumer thinks of making money so they can spend it. It's that simple. The consumer mindset is one that thinks about getting money so they can spend it on something, right? More importantly, getting money so they can spend it on something that does not make money. A consumer mindset would be, for example, someone who has a great job, works a job, and they think about, hey, I'm making money so I can afford to go to these fine restaurants. I'm making money so I can afford to buy this luxury car. I'm making money so I can go buy this fine home. I'm making money so I can buy all of these name brand clothes and shoes and bags. That's a consumer mindset. They're making money, they're getting money. However they obtain money, they're doing it with the end purpose of spending it, consuming it, right? And so what happens is that they get money, they consume. They get more money, they consume. More money, consume. So they're working to consume. That's a consumer mindset. Hard to be wealthy and profitable from that position. The difference is, let's talk about the producer's mindset. The producer thinks in terms of making money so that the money they make can go into something that makes more money. And as it makes more money, it can go into something that makes more money. Let's take, for example, a real estate investor. A real estate investor can be just like a consumer counterpart. Let's say they're both co-workers at a job. They both make $100,000 a piece a year on great jobs, engineers or nurses or what have you. The consumer mindset is making the money so they can spend it on restaurants and things that do not make money, do not generate a return, and so they will have to continue to work because they have a consumer mindset. The producer mindset is going to take that same salary, the same amount of money that they're going to use as the consumer, right? So let's say both of them are making $8,000, $8,500 a month net, right? The consumer thinks, okay, I take my $8,500 a month, I can afford this bag, these shoes, this restaurant, these vacations, this house, this car, this jewelry, these things. They buy them. They need more money to afford to pay for them, etc. And so that's why they work. So for them, the job is essential. They lose the job, they lose lifestyle, they lose the ability to function, and they have to quickly find another job because they have a consumer mindset. Producer mindset, by the same token, says, okay, I'll take my $8,500 a month, and here's what I'm thinking. I'm thinking, yes, I need a car just like they want a car. I need a house just like they want a house, right? I need clothes just like they need clothes, right? Shoes, purses, and bags, or wallet, what have you. I need the same thing that person needs, but I want to acquire it in a different way, a different time, and at a different financial position. So the producer mindset may say, right now is the time that I'm going to have the least responsibilities. If you're a single person making 100 grand a year, no kids, when are you going to be less responsible? When can you take greater risk than that? If you're a person that's a single mom, single dad with 5 kids, 100 grand a year, yeah, you've got more expenses. But in all honesty, is it going to get any cheaper? Are those kids going to cost you less next year, the year after, than they do now? So the producer mindset says, okay, in dealing with my responsibilities, I'm going to deal with them in a very responsible way. Let's look at the difference. Consumer mindset is buying name brand, going to fancy restaurants and spending $8,500 a month that, for all intents and purposes, they'll never see again, and they need to keep working month after month to have any income. The producer mindset says, instead of buying a brand new Mercedes, $60,000, I'll buy one that's 2 years old, pay half the money. Literally, they will look the same, right? Unless the body style changes. So you look just like your coworker. You're just as clean. Let's say same color and everything. Yours is 2 years old and has 30,000, 40,000 miles. Theirs is brand new. But from the outside, nobody can tell the difference. Driving them, no one can tell the difference. So for all intents and purposes, utility-wise, appearance-wise, they are the same. Now let's go to the house. And before I leave the car, let me give you this example. Consumer mindset, I have great credit. I went and spent $60,000 for a Mercedes. My car payment is $900 a month. Producer mindset is I spent $30,000 for a Mercedes, the same model, make and everything, 2 years older. I spent $30,000. My car note is $450 a month. Both of them have same credit, same job. One of them's driving a car 2 years older, but the average person looking at the cars can't really tell because they literally are the same. Producer mindset has saved $450 a month just on that alone. That one single decision, that's $450 a month not going out. They could be putting it in a safe deposit box, they could be putting it in a savings account, whatever. They're up $450 a month on their counterpart just on that one decision. In reality, they're up $30,000 and then $450 a month because for all practical purposes, they're driving the same thing the counterpart is as far as the general public is concerned. That's producer mindset over consumer mindset. Now, let's take that same example of the car purchase. Let's say the producer mindset said, hey, I need a car. I've got X. The bank says I'm good for $60,000. So instead of just doing a car loan for $60,000, they say, give me a personal loan for $60,000. And they use $30,000 to buy their car, and they take the other $30,000 and say, I want to invest. So I want to start investing in real estate, or I want to start investing in X, Y, Z, widgets, or what have you. And let's say they realize a return of just 10%, 10% net monthly return on that 30 grand. They're already up $450 a month just in having common sense and understanding that, hey, it doesn't have to be brand new. It drives new and it's new to me. They're already up $450 a month on that. But now, if they're netting 10% a month on the $30,000, and we break that off over the year, let's say that's $250 a month. Now that car is really only costing them $200 a month, so the difference between them and their consumer counterpart is $650 a month. $650 a month times 12 is like $9,000. If they did nothing else for the next 20 years, they're picking up $9,000 a year on their counterpart on that one transaction. Let's say they really are have a producer mindset and they're aggressive in their investing and they're saying, okay, boom, I'm gonna take this 30,000 and I'm gonna take the savings, this other $450 a month that I'm saving, and I'm gonna be pushing that towards what's gonna be making me 10% per annum net. It's adding every month because there's more money going into it. So literally at the end of every year, it's not just the static 9,000 a year that we said. It's actually closer to 10, 11, 12,000 a year as they're making money. And it compounds with every oncoming year in just that one simple decision. Producer mindset says, instead of I can afford a $400,000 house, nice house to go with my Mercedes. Producer, they want that nice house, $400,000 a year, which also is going to come with taxes based on that $400,000 value. It's going to come with the expenses, the lights, all of that, right? Producer mindset says, it's just me, or it's just us right now. As long as it's safe, clean, close to where we need to be for work and school and shopping, etc. So instead of a $400,000 house, let me buy a $200,000 house. Because right now what's important is producing income and getting to a point where that income can eventually take me off of the job, or at least match the job where I have choice. So the producer income says, hey, right now I'm gonna go with a $200,000 house, which automatically means half the note, half the taxes, lower insurance, and my family's gonna be just as safe as their family, and we don't have as much room as they have. We may not have the nice pool in the back, but we've got a nice, high quality property that's that much more affordable, so the value of it is gonna be that much stronger in the market, because a lot more people can afford $200,000 than $400,000. So I've got an appreciating asset that if it appreciates, let's just say 10% every 5 years, just 10% every 5 years in 20, 30, 40 years, right? Let's say 10 years. Most people keep their home about 7. So if it appreciates 10% every 5 years, in 7 years you picked up from 200,000 to roughly, let's say 240, 250 maybe. You basically lived in this house for free. You sell it for 240. You've lived 5 years for free. Paid half the amount. So let's again look at the producer mindset versus consumer mindset. What are you doing with the difference in payment? Let's say $400,000 a year is paying $2,700 a month. $200,000 a year is paying 16. That's $1,100 a month. Again, using the 10% investment net that you're making every month. So versus your counterpart consumer mindset, wow, right? So you can see how in 10 to 15 years, you're literally matching your annual income just in making the great decisions on saving and being wiser. You're in a position to where if there's a layoff, you should be pretty comfortable because you never based it on your whole income. You have income producing things that you've generated from making greater, wiser decisions. More importantly, in 7 to 10 years, you have cash flow and have established some capital to where at this point you can buy the the same house your counterpart bought, yeah, they're 7 years ahead of you on owning it. But you're buying from a position of where maybe you can buy it outright, you can put half the money down, you're still in a very comfortable position. Consumer mindset, producer mindset. Producers always think in terms of, yes, and trust me, as a producer mindset myself, we love the nice stuff too. The only difference is that how do we acquire it? See, I want to buy and drive the Lambos and Rolls Royces and etc. when the money's there. When I don't need the job because my money works for itself. It is its own job. I don't need to drive around when I have to have a payment to go with this car. If I got a payment to go with this car, it's because I'm leveraging my credit, not because I don't have the money to just zero it out. Producer mindset says, let my money make money to the point where when I own the bags or the purses or the shoes, the name brand stuff, I'm doing it from a position of paying for it off profit. I'm not paying for it off of my own labor. I'm paying for it off of the profit of my money's labor. Consumer mindset, producer mindset. Hopefully you guys understand that example. Obviously there's a lot more to it. There's a lot more that I teach my clients here. We want you to be in the best financial fitting position here at Houston FinTech and Mercedes Financial Corporation. I'm Odell DeVay, building wealth through investing, building wealth through real estate investing. I'll see you guys next time.